Writing an angel check is easy. Knowing why is the flex. Angel investing. Underused, misunderstood, explained badly. Angels Decoded, an educated and raw take. In cahoots with Play Money. But here's the deal. If you can look at your 401k, project forward, and know you'll have enough to retire, you should be angel investing. And if you have money in a DAF that's sitting in the S&P, oh, good Lord, what are you thinking? Get on in here.
It's really interesting that people have all this access that they don't even realize. And you don't need to be a tax expert. You don't need to be a finance expert. You just need to understand that there's opportunity that lives within your existing capital, where it's held, how you utilize it. So let's give some foundation for today. We're at episode number 14 of Angels Decoded. And today we're exploring how you can access capital and also start to inform and inspire mission-bound companies. So let's start with DAF. Can you give us a 101 on what DAF is?
Well, let's go to the bigger question I hear all the time is, people start off thinking, well, I can't angel invest. That's for super rich people. And then you tell them, well, actually, you can angel invest with checks as low as $1,000. And it still comes back to, okay, well, I need to figure out how to fit that into my budget, whether it's my overall budget or my investing budget. And the big unlock for so many people is you actually have money hiding in plain sight. I will go as far to say everyone who is an accredited investor has money sitting in an IRA or an old 401k that they've rolled over from a past job. And increasingly, a huge chunk of accredited investors have money in a DAF, a donor advised fund. So I would love to talk down both of those paths because they're different, but in some ways they're the same.
And my assumption is that a lot of people don't realize what they can and can't do. Just basically with 401k and DAF is a whole nother level again. So do we address 401k first? Just as far as an angel investor, what are some of the things that you could do with your 401k in this ecosystem?
So first of all, this was the unlock for me as an angel, right? I'm a startup founder, don't make a big income anymore, got a bunch of kids floating around in college, I pay a random selection of their rents every month, doesn't matter whose. So when I looked at angel investing, I was like, hey, I don't have a ton of money flowing through my monthly expenses that I can go put into this asset class. But then I sat back and looked and someone told me I could invest through an IRA, dollars sitting in an IRA that I had rolled over from back in my days working at Adobe. And I was like, oh, I can use that money? Like it is sitting there collecting dust. It was in some ETF indexing the public markets. I wasn't getting any joy out of it. I wasn't learning anything from it. And it was like, it was sitting there and it had a time window on it that looked like angel investing. I can't touch that money for 10 to 15 years, as she lies about her age and says that. But I said, this is the perfect money that lines up with the exit time frame on Angel. And I can start to have some fun with it now. So that, to me, it was a huge unlock to just know I could do that. The steps to figure out how to do that were maybe a little bit of a different story.
If we were in a room right now and we were on a panel, I would throw this to the audience and get folks to put their hands up. And I would ask them who thinks that they are actively leveraging their 401k for future growth. And I don't think many hands would go up in the room.
Goodness, no. I mean, 90% of people have that money with some kind of robo-advisor, which is not a bad strategy because you just sort of want to set and forget that money. I think that, setting it up for growth is look at what growth means. Again, in the frame of if you're accredited, 90% of us are going to have enough in there. So let's redefine growth. It's growing the money for the sake of the money's sake because you need money to retire on. And along that journey, how do you want to grow personally? How do you want to grow your impact in the world? How do you want to have a little fun? Because money is supposed to bring joy, not just more money. Call me crazy. The trickiest thing, though, we can say that's so easy. The trickiest thing is knowing how to start with those IRA dollars. Last time I was at a conference and on a panel, it wasn't about this. It was at a conference about investing in women's sports. And a woman came up to me and she was so frustrated. She's like, I have been to 4 of these events and everyone throws around angel invest from your IRA. She's like, what does that mean? No one told me how to do that. My IRA is sitting at Vanguard. How do I start?
And I bet people are paying some fee that may seem nominal for some random person who they probably don't even talk to manage and invest that money on their behalf, right? And it's not being utilized. So let's step back and to empower people. What's the setup look like to you to be able to tap into that and leverage it in a more broad and more impactful way that aligns to you and bringing some of that joy you talked about?
Yep. So the first thing, there's a little special secret handshake. You actually can't angel invest from your IRA dollars sitting in Schwab, Fidelity, Vanguard, all the typical brokerage houses. They don't do that. They only move your money into public market products, usually that they manage and make a fee off of. So the one key unlock is that you need to roll over that money, not withdraw it, roll it over to a different custodian who allows for alternative investments. And alternative investments will mean like you can invest that in startups or crypto or other other private market things with, with some rules wrapped around them. The exciting part is when I first started doing this about 4 years ago now, you had to do research. And the companies that allowed you to invest in these private market assets, they had huge setup fees, like $1,500 setup fees, $100 a month management fees. The interfaces felt like, you were using like, I don't know. I'm not even going to date myself, but it felt really antiquated. Over the last 3 years, there's been some big new players on the market. Rocket Dollar, Alto IRA, and my favorite, which is carry.com. These are special custodians where you roll over your existing IRA or you contribute new dollars and they let you invest in all sorts of things that you want to invest in. So particularly the most popular two are crypto and startups. And that's it. All you have to do is move my money from Schwab to Carry. And then it works like any other investment account. So the unlock is easier than people think, but no one is saying the words. Move it here.
My assumption is that these kind of companies, and we won't call out any of the big guys, but I bet all of them make it very difficult to roll it over because they want to keep your capital and they're never proactively going to say anything to you, right? Like it's money that lives there and people do the worry about it later.
Absolutely. They're never going to tell you you can do this. You have to go and just tell them you are doing it. And then, rollovers are a pain in the ass because they made them a pain in the ass because they want to hold on to your money. But guess what? You only have to do it once. You technically don't have to do it. You can start contributing into an IRA account on Carry, like all by yourself. But it's usually fun to start with a little stockpile of cash built up. Like my $50,000 in my Adobe rollover was perfect. Like it put some constraints on it, gave me some guardrails. But once it's over on the alternative into the alternative custodian, it's a super simple process. Like you say, hey, here's what I want to invest in. You give them a document that the SPV or the startup gives you, and they say, and you give them the wire instructions, and they say, great, proved, we've wired the money. That's it. And do you know what the best thing about it is? Can I tell you the best thing? You don't have to worry about taxes. So if there's all the things we've talked about in the past, phantom income or a distribution or a wind down or a K1 and all those noisy tax words, stop thinking about it. It doesn't matter. Tax treatment of the underlying IRA is all that matters.
So good. It makes me think I've worked more than half of my career in other countries outside of Australia, but I have the equivalent in Australia. It makes me now want to unpick that a little bit and see what I can do with that capital that's sitting there making a little bit of money, but same situation, different country.
I love it. Yeah, it's putting your boring capital to work doing something that enriches your life right now and also creates returns for you in the future. Um, do you know the Peter Thiel story? Not a
Which
man I
which one?
admire. Oh, so our friend Peter Thiel, he he bought his PayPal shares back in the day when he was a little baby founder there, with money in his Roth IRA. And I don't want to get too geeky on IRAs, but Roth IRA is you put the money in after you pay taxes on it. Like you usually do it earlier in your career. And then it grows. And when you withdraw that money, when you're older, you withdraw the money and the earnings completely tax free. So our little diabolical friend, Peter Thiel, bought his PayPal shares there, made a buttload of money off of them, used them within his Roth IRA to buy shares in Facebook early on back in the day. Well, guess what? Our megalomaniac Peter Thiel now has $5 billion sitting in his Roth IRA that he can withdraw anytime completely tax-free. So the Roth didn't help his money grow faster, but once it grew faster, it gave him this pool of money that he could invest in all sorts of other things tax-free forever, and more money in that kind of account that he could ever put in as himself. So this is like he got rid of all the tax noise around alternative investments and all the things you have to figure out. His money grew, and now he's got this massive pile of money sitting in this account that he can do whatever he wants with no taxes. Like that's a huge, like asymmetrical bet unlock. So I love that story because people, it clues people in of like, oh, that's where I maybe should be getting my money from to angel invest. It's sitting right there. I saved it when I was 27.
It's powerful and insightful, and no one knows that. And that is liquid gold right there. Take that straight to the bank, literally. So
True.
let's continue on. That's the IRA side. Let's go into DAF. And I'd love to hear that story as far as what you've heard and how the unlock for someone else is now awakening a broader market for what you can do.
This is actually the most exciting thing happening in startup investing and actually just impact overall. So DAF is a donor advised fund. What it really means, and this is how 90% of the people use it, you had a big windfall year. You got a big bonus at work. You know, you run a small business, you sold your small business. Grandma died, you know, maybe not grandma died. That's not such a good one. Grandma dies and she'll put the money in a DAF for you. But, I have a good customer story to tell on this one, and ask me for it in a second. But you get a big windfall and you're like, hey, I could either pay 40 to 60% of this money to the government for them to do maybe some things I don't love, or I could donate it all to charity now, take the big tax deduction, and then decide where I want those charitable funds to go to later, because I know sometime in my life, again, I am going to have enough capital for myself and my kids and the people I care about that I want to have money to promote or donate to the causes I care about. I don't know when that's going to happen, and I don't have time to figure it now, but I'm going to park it there. I'm going to take the tax deduction now, and I'm going to figure it out later. Well, guess what? There's $350 billion in DAF accounts now that people said, I'm taking the tax section now. I'm going to figure that out later. That's a huge amount of capital. A lot of it sits in the hands of women, and most of it, the vast majority of it right now, is sitting in public market funds. It's sitting in private prisons, oil companies, weapons manufacturers, things that most likely the DAF-minded, charity-minded, impact-minded person would be like, ew, that's not really where my values are. But gosh, I'm busy and I'm not thinking about it. Layer on one more thing. DAF custodians, again, the same cast of characters, Schwab, Fidelity, Vanguard, they're typically charging you half a point a year just to have it in the account. So it's not free. Someone's eating away at your balance while your balance is growing, you know, in exchange in those public markets. But it's this enormous pool of capital. And the thing nobody knows is that you can invest that capital in startups if you set something up right.
And simple business model here for people playing at home. You may make a little bit on that each year, but you know fact that those big companies are making so much more off the money that you have sitting there in that DAF account
Totally.
that you have got, right? So thinking about how you use that in a more sustainable way, if you want to then access and start to use that, what does that look like to align to the tax benefit you've got, which is that charitable donation element? How do you then start to leverage that capital in a way that gives back into things that you believe?
Right. And so let's be really clear here. You take that tax donation up front, And then you can advise where that capital goes, but you can never put it back in your own pocket. You can you can put it in places where it grows so you have more one day to give to the thing that matters to you, but it's never coming back in your own pocket. So, which is a really cool thing actually, because you get all the tax benefit up front and then you're like, you know what? Sort of not my money. Like if there's a place where play money truly exists, it's that DAF money. Like it's sort of amazing. Like, oh, maybe your decisions don't quite matter as much. Um, or maybe they matter more because you want to create impact with that money. So the thing you need to do and the thing you need to know is you're going to need to move it out of that custodian, whoever has it now, Fidelity, Vanguard, or whatever, in order to deploy it in the startup. And there's a super simple way to do it. Again, relatively new, so not a lot of people know about it. There's this group of companies, they call them charitable intermediaries, which is a fancy term. But companies like Impact Assets, Realize Capital, our favorite, Inspire Access, these companies are actually charities, 501(c)(3)s or whatever that word is. And what you do is you say, ooh, I want to deploy my money into startup investing. I'm going to take it from my DAF. I'm going to go to the pull down. Like literally, there's a pull down in your DAF dashboard that says, where do you want to donate this? And like for us, Inspire Access shows up on that pull down. Cool. I want to donate to Inspire Access. Awesome. Money leaves your DAF. It is donated to Inspire Access. Well, guess what Inspire Access does? They set up your own personal impact fund on Play Money. And now you can invest in any startup raising capital on Play Money with your DAF dollars. You can like go shop with those DAF dollars. It's that easy. And that's the breakthrough, that it's easy, because it used to be super hard.
Okay, so for clarity here, the workflow makes sense. What you're saying is that with that money, you can deploy it into startups. Do they have to have a classification from a category perspective that means that they are aligned to what is a charitable donation, or can it be any startup at that point?
Such a smart question. So the answer is a little bit of both. So traditionally and usually how it works is they have to have a like an ESG alignment or an impact alignment that matches the charitable intermediary that you donate the funds to, right? So you donate the funds to the charitable intermediary and then they go vet the startup for you. And they make sure that it has enough of an impact in a certain area that aligns with their charitable purpose that they can make the investment with those dollars. That process, 8 to 12 weeks. The founder has all this stuff they need to provide. You, as the donor, advisor, investor, has all this stuff you need to provide. And usually the minimum amount of donor investment you can make is $50,000. So it is a really high overhead process. The magic thing we figured out is working with our partner Inspire Access, because of what their charitable mandate is, which is underrepresented founders and fund managers. The hack is that anything on Play Money qualifies because everything on Play Money is managed through an SPV, and the management company on those SPV is women run. It has a female fund manager. So you move your money one time, however much you want, to Inspire Access. They put it in a little mini investment fund for you on Play Money, and then you can tell us where you want it to go, and it doesn't matter. There's no other vetting that needs to happen. There's no other approvals. There's no other delay. There's no other minimums. So we've taken the burden out of it, and now we just need to talk to more people about it because there's so much interest in this area, and it's more than the IRA one. People are like, I didn't know I could do that.
Love it. And for clarity's sake here, what I want to confirm, though, when you're investing in that, it is a very much a mission-focused investment. You're not getting a return off that investment, right? It's going to a startup you believe in, but are you getting a return or are you not?
Your DAF is getting a return. So it's a legit investment. It's going in on a safe or a priced round or a convertible note or all those standard investment documents. When it delivers a return, the return goes back into your DAF. So it increases the amount of charitable money you have to donate sometime in the future. The same way investing in the stock market will give you gains and now you have more money to invest somewhere in the future. The biggest difference is you had impact and you generated more money versus just generating more money. But in all cases, that money does not go back into your pocket.
Good summary. We're well over time. This has been super insightful. For people listening thinking that this applies to them, what should they walk away with from this episode?
The thing you should walk away with is probably you don't need more money. You have money hiding in plain sight to angel invest. You just have to know how to unlock it.
Simple. Ask the right questions and you've got so much opportunity, and the flow and effect of that is significant to all of those startups who are hustling and finding ways to grow. This is a huge opportunity. So Cheryl, Kellond, thank you. This has been an amazing episode. I'm Andy Walsh from Startups Decoded. You're listening to Angels Decoded. Cheryl, what a treat.
I'll see you next week. Bye now.
Angels Decoded, a weekly podcast for people learning the craft. Angel investing made easy. Subscribe, then decide. Angels Decoded, in cahoots with Play Money.